Hey everyone, this is Dan with Theta Trend. Today is Thursday, February 25th, 2016. It's about 2:20 p.m. or so again, Mountain Time. The market's closed 20 minutes ago. So we had another update here for the Russell 2000 today. The market ended the day at 1031.57, up about 0.93%. And really what we've seen is just kind of a continuation of this shorter term uptrend within the primary longer term downtrend. This is a picture of the daily chart of the Russell 2000, the RUT. And this is one of the consolidation areas that we've been kind of keeping an eye on for a while. In the lower bound of this box is down around 955, and the upper side is around 1035. The higher level of this box, obviously, we've also been watching, which is really around 985 or so. 983, 985 is the lower side of that box. And for the past month and a half or so, in general, the market's been able to stay trapped within this box. And it has been coming up here, and it looks like it is going to test the upper side of this box, possibly soon, maybe tomorrow even. And we'll see where it goes from there. It's coming into an area where there are a lot of reasons for the market to find resistance, but that doesn't mean that the market can't move higher. I mean, certainly the market can continue to move higher, even though it is in a primary downtrend in what would become essentially a shift in trend. If we drop down real quickly to the weekly time frame, it looks like my thinkorswim has frozen. There we go. We're over to the weekly time frame. We're looking at the market here coming up off of this recent low, which was down around 942, and it made a really sharp reversal. And then last week we had a big up week, and this week has continued higher after pulling back slightly to test some levels down around 1,000-ish, 995 to 1,000. And right now the market's coming up right towards the bottom of this rising trend line. And this trend line is a pretty long-term trend line. It goes all the way back to the 2009 low, following the 2008 crash. So this trend line has been touched a couple of times. And so there's obviously the potential for the market to find resistance there. This is the 10-week simple moving average, which is approximately the same as the 50-day. And that's kind of in the same area as the trend line. So, there are a few reasons, and then the market's just sort of clearing these highs up around 1035. So there are a lot of reasons where the market might run into resistance, sort of in this area, say 1035 up to about 1055, 1060, something like that. So it doesn't mean that the market won't continue higher if it can get up and above here, but it's just an area to be aware of and say, the potential for some of these moves higher is a little bit questionable, and is becoming more questionable the higher this market goes within the context of the primary downtrend. We'll go back down to the daily chart here, and so the upper side of this box is about 1035, and then 1055 would be somewhere up in here, and then 1065 would be up about here. So if the market was to break up and above this trend line in the 50-day moving average, it might find resistance here at this declining trend line as well. So there are just some reasons for concern about the continuation of this uptrend at the moment. It doesn't mean that the market can't get above there and make a run even higher up here to say 1080 or up back to 1100, but there are reasons that it might slow down or find some resistance as it breaks back up and above there. The blue lines here, the horizontal blue lines, are the expiration break-even points for the April CIB, and the trade is just a couple days old, and so it's still pretty healthy. If we do get a push up and above this 1040-ish level, maybe to 1045, I will be looking to add another butterfly on the upside. I did add a second butterfly centered at 1,000 today. We'll take a look at that in just a minute. But let's go ahead and drop down to the 65-minute time frame. So on the 65-minute time frame this week, one of the levels we've been watching is that 1,000, and we saw the market pull back to there yesterday. It undercut that a little bit down to about 995, and from there, that's where this little rally started. It essentially started yesterday, and that took the market all the way back up and above this, the 1020 level or so. And today we saw the market open higher and sort of find some support at the 1020 level, and essentially it failed to move lower. And so when the market failed to move lower, some new buyers stepped in, and they were able to push the market up and above this 1025 that we were watching for continuation on the upside. And now we're in a situation where it looks like we're likely to come up here and test this 1035 level. We certainly don't know what will happen tomorrow, but it does seem likely that the market's going to want to come up here and test this 1035 level. As long as we stay up and above this rising 5-day simple moving average, and we're getting this pattern of higher highs and higher lows, in the shorter term time frame, we need to assume that this little rally is going to continue, and that's what we've been doing here all along as the market has continued higher. So let's go over and take a look at the position, sort of keeping those levels in mind. So the market closed here at 1031.58, and that puts it right here. It's the center price slice. The upper price slice is set to 1.2% higher, so if the market was to gap higher 1.2% in the morning, this is where we'd be sitting. And the lower one is set to 3% lower, so if the market was to gap down, say to 1,000, is essentially where that would take it because we're at 1031. So as the position sits at the close today, the delta is -5, the gamma is -0.02, theta is about $10, vega is -26, and the open loss on the trade is about -$40 or so. So the position is still very safe and healthy at this point. And earlier today, I did add a second butterfly. So you can see here, I'll just scoot this up a little bit. You can see that there's a second butterfly that's been added at the 1,000 level. And so I have the 950, 1,000, 1050, and they're just two. And that was just increased size. I was a little bit light on inventory. I got out of some broken wing butterflies this week and just needed to pick something up. And I think that by trading this with two positions, it's going to give us a few additional options for adjustments and things as the market moves around on us. But for the time being, the trade is safe. So from a risk standpoint, we're going to increase the potential loss on the position slightly. Be looking at a max loss more in the neighborhood of $500 to $600 rather than the standard 300. And so for all intensive purposes, if you wanted to think about this as the single unit CIB, you could essentially take these numbers and divide them in half. So a delta of -5 gives you about -2.5. So we know that delta is still pretty reasonable, and an open loss of $20 on one butterfly is clearly acceptable. But at any rate, that's all I have for tonight. If you have any questions about the trade itself, please let me know. Feel free to shoot me an email, info@thetatrend.com. Thanks for watching.